Yeah, hello guys. Welcome to this webinar and I welcome you to Stock Fortune family. I'm Dr. Arun Lakshman. I'll be your host and trainer for all the webinar sessions covered under this course. All right, so let's begin. Let's begin and I'll structure the sessions and learnings for you very methodically, okay, very methodical in a simple manner, as simple as possible for you to understand, grasp, and follow the methods and eventually be able to execute your trades. So at the onset, I would like to emphasize the importance of using a good, decent charting platform for all aspiring traders. Okay. So charting platform means platform on which you will be able to see the charts of stock price movements of candlesticks. I am currently using TradingView and most of the professional traders prefer the platform of TradingView because of the ease of data flow. Okay, so definitely you can look forward to use this or any other superior or equivalent charting platform. Okay, because this will be the base, this will be the foundation on which you will build your knowledge, your reading abilities of chart, how you see the charts, right? Okay, so when we take this charting platform, you will have the option of viewing different time frames. You can view the see, these are candlesticks on charts, right? These are candlesticks, and the time frame of candlesticks also will vary. Traders, first few questions which comes on traders' mind is what time frame should we use for trading and analyzing? So for positional trading, minimum time frame will be a day time frame stretching over to week and a month time frame. Okay, long-term analysis, we use monthly time frame or weekly time frame. Short-term, medium-term analysis, we use minimum day time frame for swing trading. For positional and swing trading, we use minimum day time frame. For intraday, it would be 15-minute, 5-minute, 3-minute, 2-minute. All right. So intraday, we work on smaller time frames. Traders mentored under me would usually start with minimum 5 minutes time frame, and as their practice goes on, they would switch over to smaller time frames of 3-minute and 2 minutes also. So now we'll focus more on swing trading methods. So these are more slower ways of trading, more comfortable, simpler way of trading. So we'll stick our discussion, we'll limit our discussion to swing trading methods to begin with. As the learning progresses, then I would be covering more topics. Okay. All right. Now let me begin by explaining you, okay, by helping you understand how to basically identify stocks for trading. What is the generic concept which you need to have on your mind? All right. So let me explain the concept of cycle theory. Okay. Uh, this is a basic concept, cycle theory, in which you will understand how the cycle of stocks will usually be. Okay, every stock will have its cycle of activity and inactivity. See, I'm trying to help you understand with a basic diagram. Okay, simple diagram. Uh, this is how usually a cycle of stock would travel in markets. So there'll be certain period where stocks will be inactive. Okay, which in which you can see the price would mostly be flat and they would be trading in a narrow tight range. This phase of a small movement, the price keeps moving in a small narrow range. This is also addressed as consolidation. Okay, this will be a period of consolidation for the price of the stock. So once the period of consolidation or the inactive state gets over for the stock, it starts giving movement. This movement can come on the upside or on the downside. This is when the price of the stock will start giving bigger movements. And this is exactly when we are supposed to enter the trade to capture movement. See, guys, understand, to make money in markets, you need to capture a move. You need to capture a trend. The move can be upside or the move can be downside. So we either capture an uptrend or capture a downtrend. This movement we should be able to capture as much as possible in shortest period of time. This is when you will be able to make money. You have to gradually develop the skill of catching these trends. Okay, so one second. So when the price breaks out of the inactive state, as I said, we start looking for an uptrend or a downtrend. Okay, this is when the stocks will start coming into an active state. This will be an active period for the stocks. Whenever the stock trends will be an active period for the stock. Whenever the stock is in consolidation, will be the inactive period for the stock. Whenever stock is in consolidation, will be the inactive period for the stock. Okay, this you have to get very familiar. So this concept of the stock becoming active or getting into an active period or inactive period is applicable in all your stocks and index also. In index of Nifty, Bank Nifty also, many times you will see at a stretch continuous back to back for 7, 8, 10, 12 trading sessions, index becomes range bound. The entire market will be silent. You will not be able to get trades and make money during that period. Okay, market will be giving movements and all of a sudden market will go flat in a small range. The price starts consolidating. The entire price movement of the stock goes into an inactive state. This period will also be a no trading period for most of the traders. There's no point in trading when entire market is flat. Okay, now how will we plan to take the trades? Okay, we plan to take the trades in a breakout. Okay, when the price of the stock breaks out of the consolidation range, okay, when price breaks out of the consolidation range, we will enter breakout trades. So if the price breaks on the upper side, then we will start going for buy trades to capture the bigger moves. Or if price breaks the downside, we will enter a sell trade to capture the downside movement. So this, we will time our entry into trades at breakouts so that we will be able to capture bigger profits in a smaller duration of say 2 days, 3 days, 4 days, 5 days. Usually our trading method should be like, we should be able to capture a good move within 2 to 5 trading sessions. That's how consistently we will be able to make money and you will be a more successful trader. Okay, so breakout trading is one of our approach in which we can make big profits, sizable profits. Of course, the trading methods I will discuss as the session progresses, but first you need to get familiar with these concepts, and whatever I'm going to teach you, these concepts work forever in the markets. There's nothing like it'll work today, after 6 months it stops working. No, these methods are there forever. Okay, so as long as you are interested in or you are active in stock market trading, you will have to follow these concepts. All right, so breakout trading is one of our method. Next, reversal trading will be one more method. What is reversal trading? Trend reversals. Any stock which is in an uptrend, okay, we assume a stock is an uptrend and it reaches certain levels. or previous resistance levels or fresh resistance levels. So after an uptrend, stock has to halt at certain logical resistance levels. So after the stock reaches, after the price of the stock reaches resistance levels, it will take a pause. Okay, it will pause for a while. It will stay here for few trading sessions. It will cool down, and then it will start making a reversal, and the price will start falling down. So what we are going to do is we will time our entry into trade here. Okay, after the stock has completed its uptrend, the stock will take a pause for few trading sessions and then start reversing and start making a downfall. So we will enter a sell trade here, and this is termed trend reversal trading. Okay, stock which is an uptrend, we will take a sell trade in that. Similarly, opposite of this, any stock which is in a downtrend, okay, so let's assume a stock is falling, price of a stock is falling, and after a good amount of fall, it will reach certain support levels, okay, logical support levels. So after reaching support levels, the price will again take a pause and trade in and around support levels for few trading sessions. Then you will see an uptrend begin in this. Okay, so here we will enter buy. We will enter buy. To capture this up move in the shortest duration of time. Okay, why it becomes important for you to understand these very logically is, okay, one of the trader may feel, the price of the stock has reached resistance level, so let me take a sell trade. Let me take a put option and capture this downfall. But what you also need to understand is the fall will not come immediate. Although the price reaching a certain resistance levels is different from the price starting the downfall. These both are different factors which you need to understand. The price may halt here for 3 days, 5 days, or 10 trading sessions also. Then the downfall may begin. So the moment the price reaches here, we will not take any trade and wait in hopes. Okay, we will time all other factors. Okay, we will watch for the movement, and of course I'll be covering a lot of other topics as the session progresses in several parts, where I'll be discussing how to time the entry into trades in live market. That's when you can enter. Okay, so we'll combine the knowledge of positional chart reading, these concepts, and our intraday live market entries. All these factors have to be combined, and then a trade has to be initiated with a small risk in every trade. Getting it, guys? So the moment price reaches certain resistance levels, we will immediately not take any sell trade. Neither if a stock reaches any support levels, we will not immediately jump and take a buy trade and sit for 1 month. No. We know the price has reached certain levels of buy and sell. we will wait and then time our entry into trades and initiate our trades. Okay, so that's the reason I started explaining you the concept of cycle theory, right? So whatever I've explained, you repeat the videos and you practice these concepts. So you need to wait and enter the trades. So above the inactive period, when stock gives breakout, we will enter buy. We can also enter sell from these levels for reversals. Again, the stock price will go into an inactive period. Okay, so market is always like this. It will go into an inactive state. Again, it will go into an active state where it will give up move and downfall. After that, again, it will go into inactive state. So why it's important to understand this inactive state? Because this will be no trading zone. Okay. In this period, in this time of 5, 10, 15 days, 1 month. Okay. So each stock will have its time cycle differently. So this, as long as it in consolidation, we will not initiate any trade. Because after inactive period, stock will decide. Stock will decide whether again it has to move up or it wants to further go down. So this is what we'll do. After a period of inactivity, we will enter when the stock is just about to enter the period of activity. So when stock becomes active, it can give good trades, either buy or sell. So we will watch the price action and initiate our trades accordingly. So this is a very, very important concept for you to keep repeating, mastering it. Please do not just watch it once and forget it forever. You need to visit these videos, these learning sessions time and again and keep telling yourself to follow these methods. That's when you'll be successful with a period of time. See, people who are very new into markets, you will definitely take a lot of time. No one will become a trader or a profitable trader just in 1 day, 1 week, 1 month. No, it takes a lot of time to understand the concepts correctly and implement them in your trades. So it depends on people how much time they give. For some, it may be 2 years. For some, it may be 5, 6 years. Okay, so on an average, people take this much of time to understand all concepts of swing trading, intraday trading. Okay, and finally get comfortable with all types of trading to consistently generate good results. So guys, now I'll move on to the next topic where I'll be discussing few trading methods. Okay, there are a lot of trading methods. We follow certain tried and trusted simpler methods which can be implemented and where everyone can follow it. Okay, so let me begin by explaining you the charts of harmonic trading, and then I'll go into support and resistance theory on how we pick stocks. Okay, I'll also be covering you the concepts of moving averages, how we effectively put them into use, and also the concepts of higher highs and lower lows, how to trail your positions. All these I'll be teaching you. So let me just start and touch base the topic of harmonics. Okay, for all those who are not aware of the basic concepts of trading on harmonic charts. So harmonic chart trading is primarily one method of trading, one method of swing trading, where you'll get very high accurate trading levels with a very small stop loss and very good reward ratio. Okay, risk will be small and reward will be high whenever you get uh, a weekly or a monthly harmonic charts formed on the systems. Okay, the formation of these charts and patterns weekly and monthly will be very less. We get very less trades on harmonics, because on daily time frame, when we check on smaller time frames, the trade will not be accurate. Okay, accurate performing trades we will get only on weekly and monthly basis, and hence the number of trades derived on harmonic charts are very few. But whenever it gives a trade, it tends to give very huge profits for the risk taken in the trade. Okay, so that's why, and hence it's uh, important to learn, understand, and be ready to execute trades as and when we get trade opportunities. So please pay attention. Now this pattern, what you see, this is called a 5-pattern harmonic chart. Okay, 5-point harmonic chart pattern. You can see 5 points are point X, point A, B, C, and D. These are the 5 points in this harmonic chart where you need to see the values. In this, most important would be point X and point D. Any harmonic chart you get, point X and point D will be very important. You need to have your entire focus on the values of D. See, values you get here, wherever D point is plotted on our charts, we'll see the price. So in this, point D is showing us 1551 as the price, and point X 1528 is the point X. These are the values as a trader we must note down, mark alerts, and be ready, because these charts we get well in advance, and be ready to execute trades provided all the conditions matches. Now guys, at this point of time, let me just remind you that all right, see, let me remind you, it's very important to have basic knowledge of candlestick patterns. These are basics, very basics. So we have shared this to all the members as soon as you join the course, okay, in the guidelines group, what you have been shared and given access. There are a lot of trading guidelines which you need to follow. Please go through them thoroughly, religiously, and implement them when you are trading. And before doing anything, first make sure you are aware and updated on basic candlestick properties and patterns. Okay, this has very beautiful explanation for you to understand between bullish and bearish candles. See, there are only two things in markets. It's only understanding of trend, whether it is bullish or bearish. Green is bullish, red is bearish. There are only two things in market. What happens? Market is either bullish or bearish. So all references discussion will only be revolving around these. What are the bullish patterns of candles? What are the bearish patterns of candles? How do we validate them? Without this, you will not be able to progress in any manner. So Please give some quality time and practice this candlestick patterns, which are very simple to understand and update in your knowledge. Okay, it takes very less time to understand this. I want you to master them. You have to be masters of candlestick patterns. The moment you see formation of a candle, you should be able to tell, yes, this is a bearish setup. This is a bullish movement setup. Candlestick speaks everything, and all our trade we will initiate only based on these candlestick patterns. Once a valid candlestick pattern is formed, only then we will initiate a trade. See, now this is a bearish candlestick pattern. Whenever we take a trade, you will see, when you see my trades, you will see that I would have taken a sell trade after formation of a bearish candlestick pattern, which will give a big profit. Okay, similarly for buy also. At any support level, we will wait for formation of bullish candlestick pattern, then initiate our buy trade with a small stop loss. Okay, so it's your responsibility to make sure you master these candlestick patterns, then only move on to other subjects of trading. Now, let me come back to the charts where I was explaining. Now, yes, whenever you see such a chart, first you have to understand the current trend of the stock. Okay, so before a trade gets matured and executed, this is how you will see the chart. First, you have to understand the current trend of the stock. Now, if you see the chart in simple understanding, we can make out that the stock is currently in a sell trend. Okay, for last few trading sessions, last few weeks, stock is in a sell trend. And what are we looking at? We are looking at a buy trade. If you see at point D at a support level, it means we are planning to take a buy trade in this to capture this up move. So we'll just mark alerts. Once price reaches here, we will initiate our buy trade in this zone, between D to X. Okay, I already told you most important values are point D and point X. So this becomes the buying zone. So we will initiate our buying zone anywhere between D to X. Below the X value will be the stop loss on a closing basis. All our trade methods, trade practice will definitely be having strict stop losses. Okay, so when we are talking about buy trade, you should know where is your buy area, what is your stop loss, and what can be your probable targets. This is the clarity what you should have before entering any trade. If at any given point of time you feel the risk in the trade is big in terms of value, please do not enter the trade. Okay, see, when it comes to finances, money management, you are the only person who can decide what risk you can take in your trade. What is the value of money you are willing to risk for a trade? If a trader is having smaller capital and is not having a bigger risk appetite, it doesn't make sense to take a trade which is having a bigger stop loss. So all these methods, values are defined. Loss value is defined before you enter a trade. So you have to decide whether you want to take this trade or not whenever you get a trade setup. Because if after entry, there are two possibilities. One is stop loss may get hit. One is trade may fetch profits. Two possibilities in every trade. There is nothing called as sure shot trading method in markets. Nothing like this. Every trade will be a possibility of either hitting a stop loss technical based on technical analysis, or the trade can fetch profit again based on our technical analysis. So all this analysis comes under the category of technical analysis, which we initiate the trade. Okay, that's what we follow. We follow technical analysis trading methods. So now you know that this is the stop loss. Okay, where is the stop loss? Below the X point, and that also it is on closing basis. Guys, please understand, most of the traders will not be aware that stop loss has to be followed on day closing basis for swing trading, not spot. It is not that the price has just come and hit here, or the price comes and just hits here, you exit your position. No, it doesn't work that way. You have to wait for one trading day for the candle to close and then validate whether the stop loss is hit or trade is still valid. So stop loss has to be followed on day closing basis for swing trading and positional trading. Means what? Closing basis means, see, if you are looking for a buy trade, a red candle has to close well below this level. The body of a red candle has to close well below this level for us to consider that trade has hit a stop loss and we have to exit the trade booking loss. This is called closing basis. Body of the candle has to close well below the stop loss technical levels on chart. For traders who are very new, you can follow 5-minute candle closing at stop loss levels defined technically. Okay, initially, in your initial days, initial weeks, initial months of trading, to be on safer side, you can follow 5-minute candle closing basis for exiting on stop loss. As you practice and you accumulate some money, and once you build your risk appetite to go for bigger targets and bigger profit, then you can follow day closing stop loss for positional trade. Okay, so now once price reaches here, once price reaches point D, what do? We just wait. We just wait for 1, 2, 3 or few trading sessions for stock to consolidate and give proper reversal candlestick formations. Okay, we will wait for green candles to start coming from these support zones or buy zones. Then we will initiate our buy trade here to capture the bigger move on the upside. Guys, usually these trading methods, okay, which I've been following, they fetch approximately anywhere around 5 to 10 to 20% also in trending markets in terms of rewards. Okay, in terms of reward, where trade works, where trade becomes successful without hitting a stop loss, it works correctly. This is the kind of returns what you can expect. And what will be the risk? Risk will be mostly 1%. 1% is the risk what we usually take as stop loss in these trades. In very rare cases, we may consider sometimes taking 2% as a stop loss value if technical stop loss levels are bigger. Okay, then we may consider taking 2% as the stop loss value. Why I'm telling you this, you need to have an idea of what will be the risk, what will be the reward in every trade setup. So even if one or two or three, I mean, what I mean to say is few of your trades hit stop loss, when you consistently follow a good risk to reward trading method, okay, and say you take a set of say 5 trades, out of these 5 trades, let's assume 2 trades hit stop loss. So stop loss value will be 1%. Okay, 80% of times we will take trade setups where stop loss has maximum risk of 1%, stretchable up to 2% based on the trader's risk appetite. Maximum, not beyond that. This is the maximum risk you should be taking in your trade. So if we have a situation where 2 stop loss is hit, you book XYZ amount of loss value, the other three trades which gives profit, okay, profit value will be bigger. In other words, one correct trade can win back the money of 2 stop loss trades and beyond that. So overall, the 3 trades which gives you profit will cover your stop loss value and also give you very good profits as a net result. So these mathematics you have to understand. 1 or 2 trade stop loss hit, no problem. You have to book loss. You should not allow your position to go into bigger loss. That's the key in trading. Trade which doesn't work, cut it small. That is where you have to become experts in taking decision. Any trade going into loss has to be very, very small. How successful trader you will become in your journey of trading will be defined by how small you will manage your risk or how small you will manage your loss. This is the most important factor in trading. And trade which runs profitably, you have to look at taking bigger profits. Okay, so this explanation is a mixture of technical analysis and also a bit of trade psychology of money management, right? Okay, now I've told you about this buy trade. Now I'll also take one sell trade chart. Okay, this is a chart of LTTS. This is a sell chart of LTTS. Whenever you see this formation of chart in this pattern, where you get point D, okay, point D at the resistance level, then it means it is a sell trade. See, you can see stock currently is in an uptrend. From last few weeks, stock is in an uptrend and it is reaching previous resistance levels. And this is where point D is formed. So point D is called PRZ, potential reversal zone. PRZ means these are forecasted zones from which stock can take a trend reversal. So D is denoted by PRZ, that is potential reversal zone. So in sell charts, two values what you need to note down: value of D, value of X. D, the moment price starts reaching D, the sell zones start becoming active. And for you to have an understanding of stop loss, X value will be the stop loss. Just check where is the X value on your chart. Okay. X value, what shows on your chart, will be the stop loss value. And again, it is not in spot. When you're taking a sell trade, how will be stop loss effective? Okay, how will we decide whether stop loss has hit the trade technically? One green candle, any day, one green candle body closing above the X value will be a sell hit, stop loss hit. A body of a green candle has to close above the stop loss levels. It has to give a day closing above the stop loss level for us to consider a sell hit and exit the position if we have already initiated a trade. So this basics you need to know. What is my entry? What is the stop loss? What is the risk value in the trade? If the distance between D and X is greater than 2%, say some charts will give 4% as stop loss. Okay, technical formation, difference between X value and D value will be greater than 4%. Avoid it. If you still have the risk appetite, it's your choice, but I would generally suggest not to take such trades. There's no need to compulsively take trades. We can skip that chart. Even if it works, maybe let go of the opportunity and look for better opportunities in market. Market keeps giving opportunities. So one needs to have patience. Okay, see, you may see movements happening every day in markets. Okay, but doesn't mean that we can trade all the movements. To trade, we need proper entry. We need proper stop loss. We need proper target. That's when we can put our real money and trade. These are the factors what you need to understand. You may see markets moving up and down every single day. That really does not mean you can trade these movements. Not all movements are tradable. Okay, only trades that gives a good entry, slow, comfortable entry with a small risk for a bigger target, we will be able to initiate our trades. So now in this LTTS sell chart, you can see the price has reached the sell levels. So what we usually do, once the price reaches these levels, we will wait for few trading sessions. As I said, whenever the price reaches here, does not mean next day you'll have a vertical drop. Markets do not move like this, right? If it has moved, it would have moved with some strength. It will consolidate in this zone for few trading sessions, and then it will begin its downfall. So we will wait and time the entry of trade along with proper reversal candlestick formation. We will wait for a strong bearish candle to get formed or a reversal doji candle with a follow-up candle to get formed, and then enter our sell trades to capture the downside movement. So trading is about levels plus price action. Price action is nothing but candlestick formations on which we will decide to take entries into trade. Okay, so by practicing this approach consistently, you will understand how peacefully you can take limited trades and make money. Swing trading is all about taking very less number of trades, maybe take just 2 or 3 good trades in a month and make your profits. That is the beauty of swing trading. With very less trades, you can make a lot of money. Okay, guys, so this is about harmonics. So whenever we get a sell chart or a buy chart, we will plan to take trades with limited risk and unlimited rewards. So same concept for sell trades also, as I said, the risk in the trade has to be around 1%, max to max 2%. Sometimes we may tend to take, okay, if we feel trade has good potential, we may take additional risk, but this has to be the maximum limited risk. You have to limit your risk to this value. Rewards can be as high as 5, 10. In very good trending market, it can give up to 20% also from our entry levels. So we take one entry and we ride the downside movement. So this is again trend reversal trading. So stock which is in buy trend, previously we are planning and initiating a sell trade to capture the trade opportunities in markets. All right. Okay, so next we move on to the theory of support and resistance. Now, when I discuss about the theory of support and resistance, what do you exactly need to understand? See, we will be planning to initiate buy trades at support and sell trades at resistance. Okay. Support means the stock from where previously it has given a bullish move. So we will identify such stocks and mark the support levels, and when price again reaches the same level, we will take a buy trade. Okay. Similarly, when we say a resistance level, what we mean to say is previously where the stock has given a good bearish movement, we will identify the origin of that movement, and again if the price reaches the same level, we will plan to take a sell trade. Okay, so we will try to identify previous movements, the origination of previous movement. So I will just take you through few buy trades and sell trades which we have taken recently to explain you the concept of identification. Okay. See, this is a chart of ABFRL. You can see in this ABFRL chart, a simple trend line is drawn, okay, to understand that stock is trading in a range. Now, you can see a big bullish candle here. See the strength of candle. Okay. Strength of candle, always whenever I refer to a candlestick, there will be two things to see. One is the body of candle and one is the wick of a candle. So whichever candlestick is having body of greater than 80%, okay, the entire portion is addressed as candlestick. Candlestick will have two components, one is body and one is wick. Any candlestick which has greater than 80% of body will always be a strong candle. So this is what will indicate the strength. Strength of a candle is indicated by the body of the candle. Now, if you see a candle like this, I'm marking this specifically, you can see probably only 20% is the body and 80% is wick. So this candle does not have strength. It's a weak candle. You see this candle, this has strength. More than 80% is body. This candle has strength. More than 80% is body. This candle does not have strength. It hardly has 30% of body and 70% is wick. So reading candlesticks is a basic skill which you have to develop primarily. Whenever you want to initiate trades, you will have to see the strength of candle, then only initiate trades. The decision to initiate trade has to come from the candlestick formation on the previous trading session. So every candle on this chart represents a day candle. Okay, because we have selected a day chart. So the chart which I'm showing you has candlestick of 1 day. Okay, and one candle represents one entire day of trading activity. Another candle will show you another days of trading activity. One candle means one full day of trading activity. It will show you whether for the day the trend of the stock has been bullish or the trend of the stock has been bearish. So each candle represents 1 day of trading activity. If you go for a 5-minute candlestick, it will show 5-minute trading activity. What has happened? Okay, so fine. So coming back to this trade, ABFRL. Now you can see there's a strong bullish move which has originated, and the stock has given a nice uptrend, right? So this is the origin of the bullish move. This is the origin and this is the origin of the bullish move. These two candles represent strong buyer's zone and an up move has come. So we mark these zones, and again if the price reaches these levels, we will again plan to initiate a buy trade in this zone for an upside move. I'll tell you why. Because this origin, okay, the place from which a strong bullish move has happened, will have a memory. There will be a buyer's memory in this zone. There will be a buy memory in this zone. Whenever the price reaches these levels, again it will tend to give an up move from the same zone. Okay, again whenever the price comes to the same buying zone, once more you can initiate a buy trade. Same memory, again you see the same price action. This is what you see in markets. You need to identify a place of good origin of a movement. So here we are talking about buy, bullish movement. So whenever each time the price reaches the same zone, you can wait and initiate your trades upon formation of a good bullish candle. Okay, so this is one trade. Let me take all trades I'm showing you. I'm trying to show you recent trades itself. Okay, so that you will be able to relate it easily, comfortably. So Syngin is one more trade which we have taken recently. Again, I'll explain you the logic for this. Okay, you see the stock after a sell trend has given a bullish move. So you can see this becomes the zone from where a bullish move has originated. Again, once the price has come here, you can see from the same zone, it has given an up move. Again, the price reached the same levels. Okay. And right at the market opening, price opened small gap down and became open is equal to low and started moving up. So we saw the same zones were marked and kept ready for initiating buy trades. The moment we got an opportunity to buy, we initiated our buy above this. And you see how the day closed on first day, right? Strong bullish candle. See the strength of the candle, which has closed strong bullish. So then next day, you see one more strong bullish candle and one more strong bullish candle. You see the strength of the candles back to back. So this is why it makes sense for us to wait for price to reach certain levels, then only initiate trades, so that you will be able to capture such beautiful moves and opportunities in markets. Because there are already zones ready for you to initiate your trade. This is your zone of buying. This will be again your zone of buying, right? You can see in future again, after few weeks, if price again comes here, again you can initiate a buy trade with a small stop loss with confirmation of reversal candlesticks. So all that we are trying to do is find the right locations to initiate trade and take trades. Okay. Now, let me show you one more chart. Deepak Nitrate. Now we'll be able to relate the logic easily, right? The moment you see the chart, I'm sure you will be able to see this up move. This is the biggest up move. You see this entire period, okay? You see this entire period. You can easily notice this big move here. Suddenly the stock has given a random up move out of nowhere. Okay, so now whenever you see such move, you can mark these zones and be ready. So in next few weeks, few months, it may be 2 weeks, maybe 2 months. When the price reaches the same levels, okay, upon confirmation of reversal candlestick, you can initiate your buy trade above this with a small stop loss and capture this move. Again, what is the concept? Simple. We have identified a place at which bullish move has originated. So we know there's a memory that exists in this zone, and we initiate our buy trade. So any chart you start seeing on these concepts and basis this understanding, you will be able to relate the stock movement and when you have to time your entry into trade. That's the question, right? Most of the traders, they'll be clueless. They don't know when they're supposed to enter buy or when they're supposed to enter sell and where. Now you will start getting your answers where you are supposed to start searching for your entry locations in a trade. Now let me take a few sell trades also. Okay. So let me take a chart of Bajaj Finance. This is one of my favorite stock. It gives me beautiful trades. Now let me explain you again with the same logic. Okay. Now you can see from this point, stock has given a good fall. See, when I say a good movement or a good fall, always try to understand in terms of percentage. Any stock which has moved in and around 10% will be considered as a good movement. It can be around 8 to 10%, going up to 15, 20% also. This is the minimum range. Okay, 10, 15, 20. This is the minimum range of movement for me to consider it as a good movement and for me to consider it as a zone for identifying to take entries fresh whenever the price reaches there, right? This you can keep as one of the rule, and please make notes of all these tips which I keep giving you. A movement of 10%, minimum 8 to 10% is what I would consider as a good movement, which can be considered as a memory zone to take entries into trades when it price reaches the same zones. So Bajaj Finance had given a good fall. You can see price has again reached the same zones. So once I had marked these zones and kept ready, okay. So once the price reaches these levels, what happens? We'll wait, watch for proper candlestick formation, reversal candlestick formation, which I've shared with you. Okay, again, I'm repeating. This is the list of candlestick patterns which has bullish and bearish setups. So please practice this and understand. So once you are able to correlate the zones and candlestick patterns, that is where you will start becoming a confident trader. Okay, this is a bearish reversal candlestick setup. See, proper bearish reversal is formed. Set of these three candles forms a proper bearish reversal. Mark this zone, take entries into your trades, keep 1% stop loss above this. Okay, 1% as SL, and watch your trades. So if stop loss hits, exit with your stop loss, and if target comes, ride your targets. Okay, bearish reversal candlesticks for sell trades at previous memory of sell zones, and then enter your trades and see the results beautifully. Okay, so this is how we identify zones for sell and initiate our trades with combination of zone and candlestick patterns. Both of this we combine. All right, let's do one more. Markets, since they're mostly bullish, we have been focusing on buy trades in the recent past. Okay, so few examples where I'm showing you sell also. I can take a Nifty chart. Nifty also is bullish, but I'll go a little backwards and then show you how this sell zone works, right? Yes, now this is a Nifty chart. I think it'll be a good example for you to understand the index also. All charts will work the same. It can be stocks, it can be index. Concepts are same. As I told you, these concepts are forever. Okay, so now you can see the moment you see a chart, you can see what catches your attention, which big move catches your attention. See one entire period, and in this you can see this move to be one of the biggest, right? This is the biggest move on the chart when you compare this is the biggest move in terms of points. So automatically this becomes a sell zone. This will have a memory for sellers and this becomes a sell zone. We mark it here and wait for price to reach. Once the price reaches these levels, we initiate our sell trades. If we get confirmation of reversal candlestick and take sell entries, and you see the results. Zoom, how big is the fall, right? So this is what you need to start learning to correlate. Previous movements, price reaches the same level, again the same results. This is what happens in markets. Every now and then, very often, this is what keeps happening in markets. The action keeps repeating itself. All right, guys, you have to understand this very, very effectively. Practice this because you really cannot depend on others for output of your trades. You can't really message anyone and ask, sir, can I hold this position or can I exit this position? You have to decide. For learning, you take guidance. Once you master the methods, then you become active in trading. Start your trading journey only with paper trading. Okay, do never put your real money in trading till the time you really gain knowledge and understand what you are able to do with your money or what you will be able to do with your money, with your real money. That's what I mean to say. So start all your experiment learning execution with paper trading or virtual trading. You get a lot of apps, a lot of platform where they allow paper trading comfortably, options, futures, cash, whatever you want to do in paper trading. Please do it. Once you gain the confidence and once you are very sure that you are able to understand the signs of charts and movements of stocks, then you start your real trading. You mean trading with real money. Okay, so decision to trade with real money or not will be solely your responsibility. In markets, please do not depend on others to make money for you. That's never going to happen. If you want to make money and grab opportunities, you have to work for it, gain knowledge, take your decision to enter trades, exit the trades. Learning, always take as much as support required from our end. Okay. Guys, let me pause this video here. Okay, and I'll be ending this session now. In my next video, I'll be covering the concepts of higher highs and lower lows for you to understand. That will be one subject what I'll be covering, and also the concept of moving averages. These both concepts I'll cover in my next video, and I'll be stopping this video here. Okay. So catch you back in my next learning video.